Welcome back to the channel, everyone, and thank you for tuning in to another video here. Let's talk about the Nasdaq 100. Do I trade it the same way as I do any other market? I've gotten a few questions, direct messages. Answer to that is stay tuned and watch the intro to the video, and we're going to talk about it. And the answer to that question is, drum roll, yes. I trade supply and demand. It does not matter, okay, which particular market, all right, when it comes to trading supply and demand, okay? Unless you're trading individual stocks, and which you have to maybe focus on some fundamentals. When it comes to technical analysis trading, completely, it does not take much, guys, all right? If you have a strategy that works, trade it. It doesn't matter if it's options, forex, futures. It's universal when we trade supply and demand, because typically all we're looking for is just areas of significant buying or selling, okay? That's all I'm interested in, all right? Is there an aggressive area of selling at a particular zone, or is there an aggressive area of buying at a, destination point, a zone, okay? Supply, demand, all right? If you don't know much about one or the other, please spend some time digging deep or diving deep and watching some of the videos here on this channel. Again, like I always say, you do not have to sit here and learn it from me or trade the way I do. I'm not telling or forcing anyone to. On my channel, I specifically focus on the experience I went through and how I trade on a daily, and I share that with the community, all right? And that's the sole purpose of why I started this channel, to pass information that I know for it in regards to how I trade. Again, you don't have to trade like me, all right? So whatever works for you, I always talk about, use your own strategy and trade that way. Now, if you say, hey, I want to take what Mike's showing me, test it out, practice it. If it works for you, then that's good, all right? I am glad to see and will be glad to, or have known that there are individuals out there that have taken what I've shown, okay, and either incorporated it, made it their own strategy, tweaked it, whatever it may be. Again, you don't have to trade like me, though, okay? But supply and demand has been, beautiful to my life. It's been beautiful to the way I trade. It has made me successful and profitable on the daily. Yes, I am a day trader, and that's how I trade, okay? Supply and demand. That is the only strategy I trade here on this channel, okay? And that's how I'm able to reap in the benefits, all right? And people always ask, should I be using this indicator or this indicator? No, all right? You don't have to. If you choose to use indicators to maybe guide you or help you along or in your own trading, then that's up to you, all right? I don't use a bunch of indicators on my charts, and I've said that from day one, all right? Now, when I first started off my journey and figuring out what market I wanted to trade and how I was going to trade it and what strategy to trade, yes, I was using indicators, and that's only because I didn't truly understand market structure. Market structure, guys, is the foundation and the key to you becoming. It makes a difference of you becoming a profitable trader or not a profitable trader. So you're going to have to really hone your skills on or in and master the craft of learning and understanding, grasping, and absorbing, market structure. You have to be able to read the chart. You have to be able to read what's going on in the market. So today I want to talk to you about, as a day trader, primarily how I trade the Nasdaq 100. It's the same way I trade the ES futures, okay? Or any particular future markets. It doesn't matter. If you're a futures trader today and you're sitting here watching this, primarily if you trade the indices or the index futures, then it doesn't matter, okay? Supply and demand, like I said, is universal across all markets. You're going to see those setups regardless of the market, regardless of the time frame chart. I don't care if you trade range, tick, volume, or time-based charts. From a higher standpoint to a lower chart, you're going to see supply and demand all across the charts, okay? It's just up to you to pick which combination of charts you want to use in your own personal trading. Me particularly, I trade range charts, all right? And I trade it solely because It's just cleaner to the eye to me. If you trade time-based charts and those charts work for you, then stick with it. I'm not here to, steer anyone away from, what they know in regards to how they are used to trading. You trade what works for you. Okay, I'm going to say that again. Trade what works for you in your own favor and what has been working for you to become profitable. So, with that said, I've got that out the way and cleared up in reference to, the Nasdaq 100. Everybody wants to know, do I trade it? Does Mike trade it the same way he would the ES futures? Yes, there's no secret. I'm not hiding anything right here on the channel. I just look for the same type of setups using the same charts when it comes to the future markets, when it comes to the Nasdaq 100, when it comes to the ES futures. If I trade the Dow, okay, the YM, the same thing. It doesn't matter if I was trading crude oil or gold or some means of wheat or grain, the bond market, I would trade it all the same. Please hear me through, okay? So I just wanted to show you, if you don't know much about market structure, I just want to quickly give you a rundown. I've shown this image before in the past, okay? It's just a very general diagram that kind of outlines or shows market structure, okay? So let me show you that now. Market structure, all it is price, okay? Reading what it's doing. Is it making higher highs and higher lows? All right. This is just a, just a clip or a snip of an area. Say for instance, how it would look like on a chart if you're looking at the candles, right? So we have a high here, a low here, a higher high, higher low, and higher high, right? Price making and breaking structure to the upside. Breaks of structures are very key to how I trade, as well as I talk about, gaps back at the zones of supply and demand, things that help me determine, are the areas low probability or high probability. I've talked about that and covered that in many videos across the channel here. So please go back and watch the videos. I know there's a lot of videos on the channel, but you're going to have to kind of filter through them. And if you're someone that's interested in becoming an elite member, then I've hand selected a group of videos that you can actually watch, so that you don't have to watch 600 videos, okay? So, if you're interested in becoming an elite member, click on the join button that you'll find here on the video, or you can go over to the home page and you'll see that link or that button that says join. Click on that. There are 2 tiers there. The elite channel members receive those perks and rewards as far as the trade breakdowns and the video playlist, okay, of those selected videos that I put together or I've hand selected that I feel are covering the most pertinent information and covering how I actually trade, okay, so that you don't have to sit there and watch. Every video here in the channel covers great content and valuable information, but I just really hand selected the ones that I think really focus in on and give all the little nits and crannies and hidden tips about how I actually trade in the strategy, okay? But again, this is just covering market structure, all right? Price making and breaking structure to the upside here, okay? And all I'm looking for is pull back to key areas of supply and demand. Now, I'm not interested, and I talk about this all the time, looking at taking trades at a halfway movement or halfway through a leg. So this would be a push to the upside. This would be maybe the 50% area here, 50% area here. I'm looking at the origination points of where the market started to move when it started, in this case here, breaking structure to the upside. So let's say this was a push up, pull back. We got a break of structure right here. That's what this represents right here. Break of structure. This would be my demand zone. I'd wait patiently for price to get back there and then see if we get some some reaction or some rejection, okay? Price pushes up, makes a new high, pulls back, break a structure to the upside, taking out structure right here, pull back here, price can pull back and test this area as well, all right? Now, there are times where the market can reverse, okay? On higher time frame charts, the market tends to move, and trend for a certain period of time, okay? The lower that you start scaling down to lower time frame charts, you can start to see trade or trend reversals happen anywhere in the market, okay? At shorter increments or periods, all right? In this case here, the market is running to the upside. Just to show you an example of, a typical reversal, market plateaus right here, okay? Reaches a point somewhere off to the left-hand side of the chart if we were looking out on our charts, and bumps up to against some area of resistance, or maybe a means of another area of supply, okay? And then it starts to change direction, makes a low, lower high, and then pushes lower, making a new low. So we got a complete swing to the downside here with a breaking structure to the downside. So if this is a higher time frame chart, once we break structure to the downside, after breaking structure, after we've had the market trending to the upside here, and then it shifts and breaks structure to the downside off of a higher time frame chart, then I'm shifting my my mindset from looking for longs. Now I'm looking for pullbacks to go short. And that's what this represents right here. This would have been an aggressive area of selling. Again, this is a representation of how the market actually, or typical, how the market would move if you saw it on your charts. And we're going to take a look at, a couple examples, say for instance, on the chart in reference to using the candles, okay? So anyways, so this would be a representation of a pullback to a key area supply right here, okay? Aggressive selling to the downside, breaking structure. Again, this would be off of a higher time frame chart. I'm just saying that. But that's the first and foremost important part to my trading on the daily, is looking out on my higher time frame to see, should I be going long, should I be going short, and all that is based on the overall direction of what the higher time frame is doing. As long as we're breaking structure continuously to the upside, then I'm looking for longs. We start to break structure and we have a trend reversal or start to reverse in the market to the downside where we broke structure off the higher time frame, then I'm looking for shorts. Okay, so again, someone that is looking to day trade, especially if you are a beginner, please focus on a higher time frame chart and take your trades in that direction. Okay, the market's moving to the upside, it's continuously in a trend to the upside, then look for pullbacks to key areas of demand to take your trades, okay, going long, but you want to use a lower time frame. Okay, don't trade from the higher time frame. Just use the higher time frame to tell you or allow to show you which way to trade. All right, so with that said, I just wanted to kind of give you an idea of what market structure looks like, how to use it, and in your own personal trading, okay, especially in depicting the direction of the market and then scaling down or moving down to a lower time frame to start looking for those trades. Okay, we're moving up, okay, then just look for demand setups off the lower time frame. We're breaking structure to the downside, then I want to start looking for short entries off a lower time frame. Okay, so, and yes, please do not pay attention to this is a chart of the ES. I just drew this out on the chart, a chart of the ES, but this is what you'll see. Doesn't matter the market. Okay, all right. So again, now I'm just going to go over to the Nasdaq chart and we'll take a look at a few examples and talk about the strategy. I'm not going to go in great detail and breaking it down in every part of the way, because that is covered in so many videos here in this channel, the actual detailed breakdowns or covering of the strategy itself, especially if you are an elite member, where I cover those trade breakdowns. I break it down so that you understand, why I took that trade. What was I thinking leading up to the entry? All right, what was I thinking once I was into that trade? I discussed that in great detail, all those trades. Basically just an overall breakdown of my trades as a whole that I post. All right, so the elite members get that. $6.99 a month, $6.99 a month. Okay, I should say that, not $699, but $6.99. Okay, and basically what you're doing, you're just supporting the efforts of me as a content creator. That's, the elite channel membership is a YouTube tier that's part of their platform now that allow community members, those that subscribe to the channel, to support a content creator's, their videos, their information, the content that they're posting. All right. In this case here, you would be supporting my efforts of showing you how I trade. Okay. All right. The strategy I use, and what you receive is those rewards and those benefits within each one of those tiers. There's two here on the channel, but the elite channel membership tier is what gives you the trade breakdowns as well as that video playlist. But you're supporting the efforts of a content creator, of me, talking about those things. All right, showing you how I trade. Okay, talking about my trades. All right, pointing you in the direction of videos that I feel that are packed with great content that discuss the strategy of how I trade. All right, so if you're interested in joining and becoming an elite member, $6.99. Let's move over to the strategy right quick. I want to talk about that. Now this is the Nasdaq 100. Okay, this is a 60 range chart, and that's what I look at when I first get in front of my charts, my higher time frame, to kind of, well, not to kind of, but to definitely gauge what is the market doing. Should I be looking to take shorts? Should I be looking to take longs? Well, if I take a look at this chart here, this is basically from September the 27th. I see price making higher highs and higher lows, moving to the upside. It's breaking structure. Okay, and as long as there's a continuation of breaking structure to the upside, I'm only looking for longs. Okay, because the higher time frame is telling me so, right? So here the market's moving higher and higher, making higher lows and higher highs. So I'll be interested in looking for pullbacks to go long. Now, here on the 29th, which was this past Friday, the market started doing what? It started turning direction, and then we got, breaking structures to the downside. So, once price started breaking structures to the downside, if we look to the left side of this leg where price pushed to the upside here, it started breaking and making lower lows and lower highs, taking out structure to the downside. Then my mindset shifts to start looking for what? Shorts, right? Okay. So at any given point on a higher time frame, price could actually shift and there'd be a trend reversal, okay? But typically on higher time frames, the market may stay in that direction for a period of time. Now, when it comes to the Nasdaq, okay, we all know that it's a fast-moving market because it's a thin market, and it can shift at any point quicker than thicker markets that tend to like to move, and trend in one direction for a period of time, because even right here, even though we got price making lower lows and lower highs here, if you just look simply right here, it made a lower here at 810.5, right? But then it turned around and started making higher highs and higher lows to the upside, breaking this area of structure right here above 72 3/4. Okay, so now this could be where we shift our mindset again. Okay, and looking at it as a day trader to start looking for pullbacks to key areas of demand. Say for instance, so price could actually pull back to right here to 32 3/4, and you could look for maybe an opportunity to go long. Okay. But again, this is the higher time frame, so I would not be interested in taking my trade as a day trader because I scalp. All right, I wouldn't be interested in taking the trade from a higher time frame. I would scale down. I would just mark this area because this was an area of aggressive buying off the 60 range chart. Mark this area. That's demand. Okay, again, demand is it's an area where we're buying from. Supply is an area where we're selling from. Okay, so like this area right here, okay, this was a supply zone right here. Why? Because we got aggressive selling to the downside, all right, off of the 60 range chart. I would mark that area, then scale down to my lower time frame for an entry, all right. That's how I would do it. So basically, let's give you an example, all right, because I want to talk about it, all right. So here, this was an area of supply right here, okay. Why is it in the area of supply? Because look, price broke structure to the downside, okay. So we got to break a structure right below this area here, okay? After we got a reversal, all right, as price started making lower lows to the downside, started to reverse, broke structure here, started breaking structure over here, and then it started to just keep breaking structure to the downside, making lower lows and lower highs. Pullbacks to a aggressive area of selling right here, okay? You see all that selling? That's the banks or the institutions, okay? Leaving a gap. Now that is right there. One of the most critical parts to my trading is when price is aggressively and forcefully moving quick enough from an area or a zone, and then there's a gap left behind. And I talk about the gap, guys. So please, it is a part of my trading, what makes my zones that I mark off high probability. And you have to understand why these zones where the gap is at, say for instance, especially where the gap is at, why they're high probability setups. I talk about that in tons of videos covering, what's going on there. Okay, why is it high probability if there's a gap there? All right, so price retraces back to the zone here of supply. So then I just scale down to my lower time frame and look for a better entry. I want to start making and the reason of moving down or scaling down to a lower time frame chart is because then you can start zero in, it's kind of zooming in on a better entry point, a more precise entry point. Okay, to where you're not. If you take a trade off a higher time frame, then you're probably going to maybe take on a little some drawdown before the price starts moving or the market starts moving in direction. All right, it just allows you to use a higher time frame to determine which direction you should trade. Okay, and then you move to the lower time frame to do what? To mark off again. We're looking for a supply zone off the lower time frame to get into a trade. So I'm going to use my entry chart primarily, which is in this case here on the Nasdaq 100 futures. It would be off of my 12 range chart. So this happened, at 350. on Friday, so it was getting closer to the latter part of the day. So, to me, I wouldn't be trading because we're so close to the end of the day session. But again, we're just talking about an example here, okay? Because this was a supply zone, all right? All right, a market because price pulled back to it off the higher time frame. We got the gap right there. This is a break of structure to the downside, and all we do is mark it and wait for the retracement back to the zone, okay? So let's move down to the 12 range chart now. All right, so if you look at the 12 range here, I'm going to bring this down so you can see. This box here is that 60 range higher time frame supply zone, okay? So off the higher time frame, once I mark that zone, price has retraced back to it. You ask, what do I do from that point, okay? All right, and this video is someone that's new to watching, guys. Go ahead and subscribe to the channel, okay? And the reason why I'm saying that is because I'm giving you good, valuable information. You can heed to it, take it in, or whatever you want to do with it. But I'm trying to show you, kind of a good strategy that you can back test and test it yourself and see if it works for you. If it doesn't, then, do what you want to do with it. I'm just here to share the way I trade and give you some tidbits of information that may be valuable to you. So please go ahead and subscribe to the channel, join the team, come over and join us on the Discord if you're interested as well, because the Discord community is growing by the day. Find the link down in the description portion of this video for the Discord if you're interested in joining. But we got the retracement back to this zone here, higher time frame supply. What you could do is a couple of things. You could look for, first of all, you want to look for a rejection. And rejection can come in many forms. You can look for a typical M structure formation. All right. Some people, this has always been, talked about. People, even, so-called gurus out there will talk about, oh, look for the M structure. Okay. M structure like this, sign of rejection. Okay. All right. Once price forms the M structure, take the trade below the, if you want to call the base here of the M. Okay. Right here. Once it breaks below there, go short. That's what a lot of people will look for. And maybe have been taught in the past. I'm not particularly here to talk about and to talk about the M structure thing, but a formation. It is a means that shows signs of rejection because price does not what we're typically looking for is price does not want to make a new high. It makes a high here, it makes a lower high, and once it does that type of structure, it starts to form the M, and then once you get the break below the base, it's made a leg here, the base, and then a leg here breaking below the base, and then most people will go short. Another means or sign of rejection is going to be where price starts to wick out. It makes a high here, pulls back, wick. It's having a hard time breaking that high there at 28 or 29. Okay, that area there. All right, so that's another sign of rejection. What I like to do as far as confirmation, once I've scaled down to my lower time frame now, to my entry chart off the Nasdaq 100, I want to see. Some people may look for a change of character. I like to see a full-on break of structure. Okay, and price will, if you see here, it's making these higher highs and higher lows to the upside. Again, this is on the lower time frame. Now, once it breaks below, say for instance, this point here at 905 3/4, okay, this to me, that is full on an area or break of structure area right here, okay. These little zippers right here, or these areas I don't really classify so much as an area break of structure. You could possibly maybe use them as a change of character because price starts to, people trade what they call change of character. Okay, all right, and they use that as a form or a sign of rejection once price is at an area of, say for instance, supply or demand. All right, they're looking for the market to change direction. Okay, and start to show signs where it's making lower lows and lower highs after breaking through some means of a level. I like to see price full on break through an area of structure. To me, I would be looking for a break below 906.5. Again, some people may trade it a little differently, but this helps me. Okay, so once price or the market does that, breaks below, say 906, let's say 906. Okay, then I'm patiently just waiting for a pullback here on my 12 range chart to a new supply zone. So I would mark my supply zone somewhere up in this area right here because this was aggressive selling. All right, same thing we just did when we looked at the 60 range chart where we saw that aggressive selling. I want to see stacked red candles because that is a identification to me that there was aggressive area of selling to the downside where price broke structure. Okay, so I'll mark this zone here. So this right here would be a area of, supply right here, because we got aggressive selling right here. All right, forceful selling. That means to me, the banks or institutions started stacking on orders to drive the market lower, okay, and leaving these imbalances, okay, with these fair value gaps behind, and we have this gap back to the supply zone as well. Again, the gap back to the zone, as I just showed you off of the higher time frame chart, now we're on the lower time frame, shows me that this area could be a high probability setup. Now, has it got back to this area yet? No, it has not. The market closed on Monday. Not Monday, Friday. I'm sorry, guys. So if it gets back to the zone and then I see rejection, at this point, I'm looking for a typical break of a candle in the opposite direction. So let me get rid of this here and just show you that if we were to pull back and then tap back into this zone right here, the supply zone, and then I get a break of a candle in the opposite direction, then I'm looking to go short. All right, but again, I have to pay attention to price action, okay, as it was moving, moving to the upside, making higher highs and higher lows here. Okay, so once price taps into the zone, the question is, where would I be taking or looking to be taking, here off the 12 range, my target at, okay? At least the first means of maybe a few contracts or most of my position, and then maybe a last contract run, okay? But the first area what I would be focusing in on is if I got the trade back to the zone right here off the 12 range chart, I get the rejection. I go short to this area primarily right around here at 907.25, okay? Because we have, there's probably going to be some means of support in this area here because prices, again, started breaking structure back to the upside, taking out areas here. So this would be an area of support, right here at 907, okay? So I have to pay close attention to that. But either way, it'd be a great setup, great trade. It taps into supply here, maybe a little higher here. It could be at between, I don't know, it could be anywhere between 20 and maybe 22, somewhere in here. But either way, I'll look for some means of rejection there, break of candle, and then take the short. So we're talking about maybe getting in. It could be around 20. It could be as low as 19, and then taking the trade back down here to say 7 or 9. Okay, pick yourself up an easy, 17, 18. I'm talking about 17, 18. I'm sorry, guys. An easy, 9, 10 points, pretty easy. Okay, off the Nasdaq. All right. What I also like to do too is pay close attention to see is price when it gets back to this area here above a high volume area. Talking about buying the lows and selling the highs. So in this case here, we are selling at an area of a premium. Okay, we like to sell at premiums and buy at areas of discounts. And if I could take what's called a range profile. I'm gonna use this tool here. That's part of the volume profile package or a suite package that I have. You can also find this, probably I'm sure on the volume profile tool if you are own a license on NinjaTrader. They offer that suite or that package. But once price gets back to this zone here, we're right here. See a little pink line right there on this area here? It starts to approach a high volume area here. And typically I like to take the trade from above a high volume area here, but this is right at a high volume area here. So, which this is within this high volume area here, there's that VPOC right there. So you can take the trade at, an area with this high volume, but just be careful because I like to see this push it slightly above that area there. But this is a supply zone coming back to a high volume area that typically something is going to happen at, okay? Especially where we've got, the supply zone off the higher time frame and then a supply zone set up off the lower time frame. It's just added means of more confirmation to, your trade, all right? So taking trades primarily off of one chart, especially off a lower time frame chart, if you're someone that's new or a beginner, please be very mindful because you may not have taken a look to see what's going on in the higher time frame. And those that are more experienced, that you don't, there are instances where we can look for trade setups, beautiful setups to where we're not always taking on trade specifically, if the market's just trending to the upside and we just can't find a place to get into, or we're waiting for a pullback to a key area of supply or demand off the higher time frame to look for a setup off of our lower time frame. There's still instances where you can trade against the grain, meaning counter trend if you're just not getting a decent setup off the higher time frame. But in this case here, we got a beautiful setup off the higher time frame and off the lower time frame, which allowed us to take a short entry. It's just a matter of being patient and waiting for the full setup to unfold. Okay, so I don't know what price is going to do when it gets back. If it gets back up here, it could blow right through this area. But this is in this case here, a high probability setup for me and looking at, because we are pulling back to a gap at the area where there's a supply zone now on the lower time frame. But once the market opens back up, it could have gap past this area here. If we were still into the session and it pulled back here on Friday and we still had time, more likely I would have taken that trade going short. But I just want to show you guys that the same type setups are what I look for, using multiple chart confluence, especially a higher time frame and moving down and taking entries off of a lower time frame. That's what's going to increase the probability of a trade working out in your favor. But the key to it all is really being patient and truly understanding market structure. I want to leave you guys with that today. Now, again, I said if you're interested in joining the Discord, please find that link down in the description portion of the video and just add yourself in. You know, it's free of charge. Come over and join us on the trading floor. That's where, you know, we as traders come together and we're trading, you know, not live, but we're actually posting screenshots of our trades. And the reason being, we post those images of trades taken, and those traders, people who are part of the community, engage in conversation, you know, in regards to people's trades. And if you have a question and maybe you want to ask, you don't understand why someone took a certain trade, then you have the opportunity to speak to that trader, whether DMing them or making a public message on the Discord community on the trading floor and asking. All right, it's your opportunity. So outside of that, there's also a general chat channel to where, you know, you can ask general questions surrounding the future markets, you know, if you are interested. All right, so again, you can come over and join us on the Discord by finding the link down in the description portion of the video. But that's all I have to share with you guys today in regards to the Nasdaq 100 and how I trade it as a day trader. Okay, but my go-to baby is always and has been the ES futures. Okay, which is the E-mini S&P 500, and it doesn't matter if you trade the MES as well. All right, get your foot started into the markets one way or the other. The futures to me are the best opportunity. May not be for everyone. Maybe you love to trade Forex, but again, supply and demand is universal. Okay, please take the time to go ahead and sub. Click on that bell button as well to make sure and turn on all your post notifications. And the most important part to all of what I'm going to say is drop a like on the video. Thank you, and I'll see everyone in the next video.